Hello everyone, welcome to EPK Capital's Deep Dive video. I am your host, Alan. In this series, we analyze and scrutinize one company each day based on its last 10 years financial data, its fundamentals, and its management. So you can decide on whether the company is a sound investment or is overpriced. Today we are going to talk about Asian Paints. Just a quick note that this video is for educational purpose only and should not be taken as a financial advice. For your personal advice, you can connect with us or your personal financial advisor. For decades, it has been the undisputed king of its industry, a blue chip stock that has painted a story of incredible wealth creation. But the canvas is changing. Fierce new competition is entering the fray, and the company is facing a serious regulatory probe that questions the very source of its dominance. The stock, once a market darling, has been underperforming. So, the big question for you listening is Asian Paints still, a masterpiece for your portfolio? Or are we actually starting to see some cracks in that foundation? Our mission today is simple. Give you the full picture, neutral, looking back over 10 years of data. So let's unpack this. Okay? To really understand where Asian Paints is now, you've got to look back. Its origins are, deeply woven into modern India's story. It's quite a story. Founded back in 42, Mumbai. 4 friends basically saw an opportunity during a World War II import ban, became the sort of homegrown champion, and they rose incredibly fast. By 1967, they were already India's #1 paints company, and they've held that spot ever since. Wow, since 67. That's remarkable stability. It is. And a lot of that comes down to the founding families. Yeah, the Chalkses, Danas, Vakils. They still hold a big stake, about 52.63%. Very stable. Okay, though, one small thing may be worth watching. There's been a bit of an uptick in their pledged shares. Shares used as collateral for loans. It went from about 6.5% in late 2023 to closer to 9.4% by mid-2025. It's not huge, but it's a trend, something to keep an eye on. Interesting point. So, seizing that wartime opportunity was key, but obviously they haven't just stood still since then. How has the core business actually changed? Well, decorative paints are still the main engine, yeah? Around 85% of revenue. Think Royale for the high-end, yeah? Tractor for the mass market, right? But the really crucial shift, I think, has been this aggressive push into becoming a kind of one-stop shop for home improvement and decor. The diversification play? Exactly. It's a strategic hedge against paint maybe becoming a commodity, and definitely against this new competition. They want a bigger share of wallet. Makes sense. So they bought companies like Sleek International, that's modular kitchens, S for bath fittings, even white teak for fancy lighting, trying to cover the whole home. So it's not just paint on the walls anymore. Not at all. Now they do operate globally, but let's be clear, India is where the real profit is. International markets like, say, Sri Lanka or Indonesia, they've been challenging. Okay, so we have this picture of past success, strategic shifts, but how is all this pressure actually hitting the bottom line? Are those cracks showing up in the numbers? Yeah, they are starting to. Historically? You saw really solid, consistent growth, revenue compounding, 9, 10, 11% a year. Pretty reliable. Very. But fiscal year 25, that was different. Consolidated net sales actually fell 4.5%, and net profit dropped a huge 32.8%. Wow, that's quite a drop. What drove that? It's a mix. Demand was a bit soft, input costs were up, and crucially, that increased competitive heat we talked about. And margins. I know they historically had great margins. They did. Operating profit margins usually hovered around 22%. In FY25, they contracted to 17.1%. That tells you their pricing power is being challenged. Okay, but the underlying company, still strong financially. Oh yeah? The balance sheet is still a fortress. Almost no debt. Debt to equity is tiny, less than 0.1. Yeah. And they still generate strong cash from operations. So, fundamentally sound, but the most telling number, I think, is the return on capital employed, ROCE. It fell off a cliff, basically, from 41% in FY24 down to just 26.58% in FY25. Explain ROCE quickly for us. Why is that drop so significant? It measures how efficiently a company uses its capital to generate profits. A drop like that means they're getting much less bang for their buck. It signals an erosion of that legendary efficiency, maybe their competitive advantage. Got it. So with those numbers shifting, what about the stock itself? I know it's been a long-term winner, but recently, over 10 years, its compounded return about 11.8%. Did slightly beat the Nifty 50 index. But yeah, the last year, it's down quite a bit, around 18%. Still pays a decent dividend though, right? Yeah. Growing consistently. It does. Consistent and growing dividends, that's a plus, which actually leads into the whole valuation puzzle. Oh, the Benjamin Graham connection, eh? Exactly. It's fascinating. Under Graham's rules for a defensive investor, Asian Paints ticks a lot of boxes for quality. It's big, financially sound, stable earnings, great dividend record, all checks. Okay, sounds good so far. But when it comes to valuation, it fails spectacularly. Yeah. The price to earnings ratio, the PE, is around 66. Graham liked it under 15. 66, that's high. Very high, yeah. And the price to book ratio, PB, is about 12. Graham wanted it under 1.5. So you see the disconnect. Great company, but the market price is way above traditional value metrics. So the market's paying a massive premium. Historically, it always has commanded that quality premium. But now investors are clearly starting to ask, is that premium still justified, especially with these new pressures? Right, let's talk more about those pressures. This great Indian paint war sounds intense. Grasim Industries, Birla Opus, that's the big one. That's the elephant in the room, yes. Grasim, part of the Aditya Birla Group, huge conglomerate. They've entered the paint market with Birla Opus, a massive war chest, building huge capacity, hitting the market with aggressive distribution, deep discounts. And that's already hurting Asian Paints, you said, visible in the FY25 results. Clearly. That competitive intensity is a major factor in the margin squeeze and profit drop. Okay, so intense competition on one side. What about the regulatory issue, the CCI probe? How serious is that? It's very serious. In July 2025, the Competition Commission of India ordered a full investigation. The allegations are pretty damaging. Like what? Abusing its dominant position. Things like allegedly threatening dealers if they stock rival brands, hindering competitors from installing their tinting machines in shops, maybe even pressuring suppliers. Wow. And that hits right at their core strengths, doesn't it? Their distribution network. Exactly. That network of over 160,000 retail touchpoints. That's their moat, their biggest advantage. This investigation directly attacks that. And potential consequences could be substantial penalties, fines, or even worse, potentially orders, forcing them to change how they operate that network, which could fundamentally alter their business model. It's a significant overhang. Okay, so let's try and sum this up. If you had to make the bull case for Asian Paints today, what are the key points? Sure. The bull case is unquestioned market leadership, huge brand trust built over decades, that fortress balance sheet we mentioned, the powerful, even if challenged, distribution network, the smart diversification into home decor, and, the consistent shareholder rewards through dividends. Okay, solid points. Now, playing devil's advocate, what's the bear case? Why be cautious? Well, the bear case centers on that intensifying competition, which is clearly squeezing margins already. Then there's the extreme valuation, very little margin of safety at these PE levels. And, of course, this significant regulatory risk from the CCI probe casting a shadow, right? So, putting it all together, Asian Paints is undeniably a phenomenal company, a titan, like we said, but it's also very clearly at a critical crossroads. Couldn't agree more. A pivotal moment, which leaves the final thought for you, the listener. In a market that's getting way more competitive and with the serious regulatory scrutiny, how much of a premium should you really pay for that undisputed legacy? Something to think about. So I hope you liked the video. For more information or for your personal financial advice, kindly connect with us on the details given in description. Do like, share, and subscribe to our channel for such amazing content daily. Thanks for watching.